Good afternoon, welcome to GrainTV. My name is Cody. Today is Friday the 29th. For the weekly wrap-up, let's turn over to the grain hedge trading platform and see where we closed off the day. Corn trading down 2 cents, soybeans up 8 1/4 cents, and wheat in Chicago here down 10 3/4 cents, with Kansas City wheat also down 10 3/4, and Minneapolis wheat leading the charge lower, down 15 1/2 cents on the day. We did get export sales out on Friday here. It was delayed today due to the Memorial Day holiday, which shortened up the trade week. Let's take a look and see what the export sales report had to say. We did see soybeans come in beating analyst expectations, booking 322,000 metric tons, well above the 150 to 300,000 metric tons that was expected by analysts. This is very positive to see continued export sales here late in the marketing year. We've really outperformed this year. We continue to see the USDA revising export sales higher here, but I would expect in the next WASDE report to see another revision higher as we continue to get export sales during a time when cancellations, or at least very small export sales, are typical. Corn came in meeting analyst expectations in old crop sales, 654,000 metric tons, falling within analyst expectations. Wheat coming in booking positive export sales, but nothing too exciting, not enough to write home about here. 42,000 metric tons sold for old crop. When you look at the new crop sales, really kind of disappointing there. Cancellations there of 6,000 metric tons for corn. Soybeans coming in at 55,000 metric tons, and wheat 253,000 metric tons. The nice thing about wheat is that was within analyst expectations, but corn and soybeans very disappointing on the new crop sales. Let's take a look at the cumulative sales here for both soybeans and for corn. One thing you'll notice is that soybeans, as we talked about, continuing to run well ahead of pace to meet USDA expectations here. We have cumulative export sales right now of 50 million metric tons. That's compared to last year when we booked, or had already booked, 44.9 million metric tons. And the pace needed to meet USDA expectations, which is this green line, we're still ahead of that. That's 47.6 million metric tons. So we are running well ahead of pace of last year, well ahead of pace we need to meet USDA expectations. As a result, I wouldn't be surprised to see a revision higher there in the next WASDE report. For corn, we have cumulative export sales of 43 million metric tons versus this time last year we saw around 45.6. So we are running behind last year's pace, but we are still ahead of the pace needed to meet USDA expectations, which is right around 41.9 million metric tons. So corn continues to show strength. I question whether or not we're going to see a revision higher here in export sales from the USDA in the next WASDE report. I would think that it's a pretty certain event here for soybeans, but of course there's always a risk that they do not modify it and we continue to get some sort of cancellations late in the year. We'll have to see how that next WASDE report shakes out. One thing we do talk about here, of course, on Friday is the cash market update. And if you take a look at the slides, you'll notice that we do have some nice maps here of the basis changes for both corn and for soybeans. You'll notice when it comes to corn and soybeans, we did have basis mostly unchanged here. Soybeans was up on average across the U.S. a penny this week in basis. Crush was really the strength out of soybeans. We saw crush up on average 3 cents. Western parts of the U.S. we saw crush facilities up as high as 5 cents, improving their basis by as much as 5 cents there. The Gulf was up 2 cents, the river was up a penny, so no real major changes there in the cash market this week. We did see corn, soybeans, and wheat all trading mostly lower here on the week, and that really didn't seem to have too much of an effect on the cash market. Corn basis on average was unchanged. Ethanol unchanged. We saw Iowa basis lower, anywhere between 2 to 5 cents lower here. So we did see it kind of like a swath of weakness there in Iowa. We saw river terminals on average for corn up 3 cents. St. Louis was up as well. And over the last 2 months, I mean, we've seen an 18-cent increase out of St. Louis. So good basis changes there, good basis strength there. It seems as though the river is where we see continued strength here for both corn and for soybeans. Guys, that wraps up today's show. If you have any questions about what we talked about, please give the office a call. Number's 877-472-4607. If you haven't done so already, go ahead and take a grain hedge trading platform demo. The nice thing about that demo is you get a mobile phone or a mobile platform along with it that can go on your mobile phone. You get live quotes, you can execute trades, you can monitor your positions from the field. You don't have to be right in front of the office desk to make a trade or to manage your price risk. So thanks a lot for tuning in here. I hope to hear from you, hope to see you take a demo, and we'll be in touch with you. Make sure you feel comfortable with it, providing personalized one-on-one trading. Have a great weekend, have a safe weekend. We'll see you on Monday.